Co-powered by Green Lamb Laminates. हर गुस्ताखी साफ.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Crude oil prices trade near a 3-month low amid surging dollar and weak demand denting sentiment. Brent crude below $99 a mark. U.S. inflation jumps 9.1% in June, even more than expected as price pressures intensify. CPI inflation at highest level since December 1981. The rupee hits a record low for the third straight session as foreign investors continue to dump riskier assets. Rupee moves closer to 80 to the dollar. Sensex loses over 350 points, Nifty below 16,000, dragged by energy, oil and gas, banking and power stocks. After Vivo, Chinese mobile phone maker Oppo faces government action. Directorate of Revenue Intelligence alleges customs duty evasion of nearly 4,400 crore rupees. Meanwhile, Delhi High Court allows Vivo to operate its bank accounts that were frozen by the ED with some condition. Twitter takes Elon Musk to court for pulling out of his proposed $44 billion acquisition of the company, accuses Musk of trashing the company, disrupting operations and destroying shareholder value. Global crude oil prices have fallen further to touch the 3-month low mark due to surging dollar and weak demand. Brent crude below $99 mark after U.S. inflation hit a 41-year high. Analysts believe that the latest fall in prices could be attributed to rising fears of a possible recession, along with the aggressive monetary policy tightening by various central banks. These factors are essentially leading to weaker demand for crude oil and thereby contributing to the fall in their prices. Rupee hits a record low for a third straight session. It was another record low for the Indian currency, which depreciated by 3 paise to close at a record of 79.62 against the US currency. The rupee has tumbled 6.6% so far this year. The fall mainly due to high crude oil prices, strong dollar overseas and foreign capital outflows. A stronger dollar and weak domestic growth prospects leading investors to flock to safe greenbacks, ditching riskier India assets. While markets started the day on a positive note, they gave up early gains to close in the red for a third straight session. Sensex down 372 points, Nifty settling 91 points lower, below 16,000 in fact. Banks leading losses in today's trade, energy stocks also under pressure. While IndusInd Bank recovered nearly 4% from lows following clarification on ED investigation, it was still the top Nifty loser. Other laggards included HDFC Twins, Bharti Airtel and Reliance. Pharma stocks outperformed. Divi's Labs and Cipla were among the top gainers. JSW Steel, HUL and Grasim were the other blue chip gainers. After a boom seen last year, there has been a significant dip in new accounts opened by systematic investment plan investors. Even the number of new demat accounts are seeing a decline. Amid the market volatility, are investors losing faith? Harsh Jain, CEO and co-founder of Grow, joining us on the show. Harsh, take us through why we're seeing this dip. Until now, retail was really what was keeping the market afloat. We're suddenly seeing a chink in that armor.
So I don't see this, an unusual or unexpected dip, because if you look at the data, 2 years back before, or maybe 2.5 years back when the pandemic hit us, the numbers are still twice those numbers before pre-pandemic. So it's not really that, the numbers have started going down. They just got not bad, actually not back, they're actually slightly better than, significantly better than the numbers that were there before that. So it was more of a phenomenon of the last 2 years than is today. So 2 years we saw a really big spike. People had a lot of realization, they had more time, they had more insecurities, and they got into the industry that, they want to start investing. And now they got back to their work and the usual life starts. And still we are seeing a significant jump from the 2.5 years back numbers. So it's more of a correction than really a dip that I'm seeing here.
Harsh, we're also seeing a dip in the SIP numbers, which is interesting because even though there's a lot more investor awareness and long-term investing, that's been taking place, we're now actually seeing a cutback on those numbers as well. So are you seeing a change in behavior patterns or a shift in mindset?
No, I think this is a very temporary phenomenon. We've seen this before also, that these volatility and the conversations around, it's not really the numbers. If you look at the market, they've not, like Indian markets have not corrected or not gone as much down as the sentiment out there. The talks, the conversations, the news, the videos, everything is much more talking about it, but the markets have not gone as worse today. So it's more of a temporary phenomenon, is my personal opinion. I think it's going to come back very soon. There's a lot of effort that needs to be made across for education and financial literacy, which is what, at least from our side, we do. And a lot of people are doing actually. Practically, if you see, this is the time they should do more SIPs, because it's the time where they will average their costs down. And there's a good time for people to start investing, because, there's always upside. There's already upside possible. So overall, with more information, more education, this is going to come back. It's a temporary phenomenon.
So what do investors do then in current times, Harsh? Are you seeing more people sitting on cash? Because I'm not sure there's any other alternate asset right now that they're leaning towards.
Yeah, so see, it's not like just should not sit on the cash. I mean, it's not that one should wait for the right time, because you never know what is the right time. So the best way is to do an SIP. Actually, the best way to continue investing. And, if you really believe in the companies that you're investing in or the mutual funds that you're investing in, you should probably increase your investments as the corrections happen and continue investing. I think that's the right thing. But obviously, different people have different approach towards investing.
All right. Harsh, what is your outlook on the markets then? Yes, agreed, it's volatile, uncertain, temporary. How temporary?
So I'm personally very optimistic. I don't see a reason, and I'm not seeing the strong nexus that it used to have before between the global markets and developed economies and India. So that's not anymore. We're very, very independent now. There's a lot of focus on building in-house businesses, and there's a lot of focus on, the awareness that is getting created towards the market in general amongst the retail investors in India. I was looking at some data. There are almost 50 million monthly users who are on YouTube consuming finance-only content, right? So that level of awareness has never been before. Sure. So it's just different economy. Of course, there's a news which makes bigger headlines if it's about a US company and $1 trillion, companies making a correction in their share prices. But I think fundamentally, I'm very optimistic, but it's very difficult to predict. You don't know whether, it's a 3 months, 6 months, or a 12 months phenomenon, but it's a very positive outlook for our country.
All right, Harsh, thank you so much for joining us and taking us through all the latest developments when it comes to trade. Now, in the latest chapter of the Twitter Elon Musk saga, the social media giant has come out all guns blazing, going to court against Elon Musk for backing out of the $44 billion offer to buy Twitter. The company has sued the billionaire for breach of contract and wants Musk to complete the deal. Here's a look at the latest twist in the Twitter takeover.
It's been a busy few months for the man who is revolutionizing travel on the roads, under the ground, and even in space. Elon Musk first promised to buy Twitter for $44 billion. Initially, the management was lukewarm to the offer, but then accepted as the $44 billion valuation was too good to be ignored. The twist in the tale happened when Musk seemed to be struck by a case of buyer's remorse, saying that the so-called spam bots meant that Twitter wasn't worth that much money. He has finally backed out of the deal, and the Twitter management is now running after him to ensure that the world's richest man stays true to his word. But after being sued, the world's richest man's reaction is just 3 words. Oh, the irony. Musk started accumulating Twitter stock late in January when the share was trading at around $37. By the time he disclosed his stake in early April, he had quietly become the largest single stakeholder in Twitter with 9.2% ownership. 20 days later, Elon Musk announced a $44 billion bid to take over Twitter fully. But it has been a journey full of twists and turns. Musk first put the deal on hold, asking the Twitter board for data on the number of fake and spam accounts. Weeks later, the billionaire decided to abandon the deal, criticizing the company for failing to provide enough information on fake accounts. Musk made merry of Twitter taking him to court, setting the stage for what could be an interesting courtroom battle in weeks ahead. But Twitter isn't the one to sit silently. The company didn't mince words while launching a blistering attack on the Tesla CEO, alleging that he was not honoring the deal since it no longer serves his personal interests. The social media giant accused Musk of thrashing the company, disrupting its operations and destroying shareholder value. Well, it's been a rollercoaster ride for Twitter's investors. Shares of the microblogging company have declined. Nearly the stock, which rallied on the back of the deal in April, is now down in the dumps this month after the deal turned sour. Now as Twitter drags the world's richest man to court, all eyes are set on what happens to Twitter next. Bureau Report, India Today.
Here's what else is making news today. Let's take a look at all the buzz in the corporate world. After Vivo, now Chinese company Oppo under the lens. An investigation by Directorate of Revenue Intelligence has found that the smartphone maker evaded customs duty worth 4,389 crores. Delhi High Court has lifted a freeze on Chinese smartphone maker Vivo's bank accounts imposed by the ED, but this one condition: Vivo has to furnish a bank guarantee of 950 crore rupees within a week with the Enforcement Directorate. IndusInd Bank recouped some losses in trade today after the bank issued a clarification on an FIR filed against some of its entities and a few employees. As per IndusInd, ED Chennai is investigating few companies for alleged irregularities in remittances for import transactions for 2011 to 14. Global tech giant Mindtree reported a mixed set of numbers. The net profit was down 0.3% Q-on-Q. Margins also under pressure this quarter, but revenue up nearly 8% in comparison to last quarter. And in other global news, as uncertainty looms large over the global economy, Google will slow its hiring pace for the second half of 2022. Google's top boss, Sundar Pichai, asked employees to be more entrepreneurial and work with more hunger. Let's take a very quick break on that note. When we return, ask Udayan. Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya, and you're watching Ask Udayan, the show where we answer all your queries on stocks. With markets being through very turbulent, uncertain times, lots of tensions on the economic front, rising inflation, increasing rates, this is really a good time to get your strategy in place. Do message us on the numbers on your screen, and we will take a few queries every week. Our first question today, and let's bring that one up for you. We've got Mausumi Chakraborty from Bangalore, and her query is on one of the old giants, ONGC.
Hi Udayan, this is Mashmi here from Bangalore. I have 200 shares of ONGC bought at 161. Now my query is, though the crude oil prices are going up, but this particular share is showing a downtrend. Please advise whether to hold or to sell. Thank you so much.
Well, it's unfortunate what's happened with ONGC, because you're right in your expectation that higher crude prices would translate into higher profits for ONGC. But that's not going to be the case because of the recent imposition of the windfall tax that the government has brought about and the tax on the cess on crude, which basically means that when crude prices are down, ONGC does not do well. And when crude prices are higher, then the government takes away the excess profit because it believes that it's an unfair generation of profit relative to what else is going on with the economy. The stock went up almost to 200 rupees earlier in the year. And that's because of expectations that people like you had that higher crude would generate higher profits. And now that does not seem to be the case any longer. We've seen the stock go back, collapse to about 120. The right way to look at ONGC is not through the prism of valuations, because it is always a cheap stock. It pays about 15% kind of dividend yield. The P multiples are 2 and 3. But the fact is that the core business of oil production is not ramping up significantly. And government policy and ad hoc government policy is a huge hangover over the stock, which is why most investors tend to stay away from this name. So I'm afraid I cannot tell you hand on heart that it's a stock you should hold on to and you'll get your price back very soon. In fact, if there are any kind of crude price related up moves in the stock, I think you should consider probably lightening up or exiting that company and look at some of the better companies in the market to look at. This is not, of course, an active advice to sell, but I am very circumspect about the prospects of PSU upstream oil companies like ONGC even going forward.
Vasudev Nandan is also sent in a query from Greater Noida. This one is on Nazara Tech. Let's listen in.
Dear Mr. Udayan, I am Vasudev Nandan from Greater Noida. I have 85 shares of Nazara Technology purchased at the rate of Rs 2033. Now the rates have come down. What to do now? Please advise. Thank you.
Well, it will take a very long time, sir, to get back to your price, if ever, of Nazara Technology. You've bought at the absolute peak. The stock has crumbled, losing more than half its value this year, down to 600-700 rupees. Part of it is, of course, to do with the overall drawdown in valuations in the digital space. Every digital stock has got hammered. And as you know, Nazara is an online sports company. But esports is basically its business. And the business itself is not too bad, because earlier they would sell through OTT players. Now they are also going to be shown on Star Sports, and we'll see how the monetization of those esports programs actually work out on mainstream television. But it's a profitable company. It's not one of those digital companies which does not make any money. Nazara actually is profitable. But the fact that the starting point of valuations had become very high. So what has happened over the last year or so is that the froth in valuations has got completely hammered. I don't think Nazara qualifies as a super expensive stock any longer, but there are lots of question marks on growth and whether this is the best company to buy in the online gaming space. I would say that if you get a good rally or a pullback, which happens in many of these bombed out stocks, you might consider exiting Nazara as well and looking at some of the other companies because I think the better companies in the gaming space are yet not listed, and over the next couple of years, market conditions permitting, you will find more of those companies doing their IPOs, and those might present better opportunities. Again, not an active selling advice, but I'm not very hopeful that you will get your price back anytime soon.
Moving on to Surat, Kalpesh Kacharya has a query on Cummins. Let's hear him out.
Good evening, sir. I am Kalpesh Kacharia from Surat. I am your regular follower last 20 years. I am always regular watching your view upon the market. And now my question is, I have 100 share of Qmins at the rate 1,140 rupees. So when I book the profit, and now the capital sector is doing good, and the government also spending lots of investment in the infrastructure and capital goods sector. So what is the view upon your capital sector?
I like the sector. As you mentioned, it's not doing badly. You've bought close to the recent highs for Cummins, so you will have to wait a bit patiently for the profits to come by. But they will come, I think, because the space is doing well. Cummins itself is up 30% over the last 1 year, so you can see that the market is responding to prospects for this company and the order book. The stock price has been in a range. I mean, Cummins for the longest time, last 6-7 years, despite being a good company, has been in a broad range of 600 to 900 rupees. But now it's threatening to break out of the trading range at around 1100 or so. But I think the market is quite optimistic about prospects, both for diesel engines, which Cummins makes, and also for the power generation and distribution equipment it is present in. There were a couple of hurdles with Cummins in terms of the semiconductor shortage, which led to some issues, and also their margins were a bit under pressure because of the spike in metal prices. But both these issues seem to be getting addressed right now, raising prospects of greater profitability in the quarters to come. And I think you should expect 25% plus kind of growth for Cummins over the next couple of years quite easily. So I would not be in a hurry to book profits in this company. I think it's probably going to be a breakout of a range after many years. And the coming couple of years, 2-3 years, look promising.
And Mickey Singh in Mumbai has a query on Tanla Platforms. Let's listen into what her query is around this stock.
Hi. Tanla Platforms has corrected 50%. Is it a buy, sell, or a hold? Thank you.
Well, it's a tough one because I think Tanla's biggest problem was that it was a super expensive stock. But as you said, the stock has more than halved, and therefore a lot of the valuation froth has gone away from Tanla. But I think the bigger question other than valuations is whether Tanla can continue to exhibit the kind of growth that it has exhibited over the last 3 or 4 years. I mean, as you would know as an investor, Tanla's revenues went up 3 times in the last 3 years. And as you also know, it is, I mean, to oversimplify, it is a play on the SMS economy, but it calls its products CPaaS, which is Communication Platform as a Service. But basically, every time you make a transaction and you have to get an OTP, Tanla more times than not is behind that OTP which is being generated. So it benefits every time there is some kind of SMS involved in the financial landscape. And the question is, because technologies like WhatsApp are sort of replacing SMS in such a big way, whether Tanla can continue to ride the crest of the wave it has been riding over the last 3 years or so. This is of course an oversimplification of its business model because it has a successful enterprise business as well. Personally, I believe that it's a reasonably good management. It's a strong technology company. And while growth might moderate in the next few years, I still think it will be a fast-growing company. And given that the valuation correction has been fairly significant, it might be approaching interesting levels for accumulation for slightly medium-term investors. So the time to sell Tanla probably is gone. The price correction has already happened. Now it's a question of whether you believe in the growth prospect and whether you start to look at opportunities to accumulate that company once again in the triple digits over the next few months or so.
And that's how we leave it on the show today. But do keep sending in those queries, and we'll take a few every week. Udayan, thanks for answering all of those questions this week on Ask Udayan. Thanks for watching.
la main des aides-soignants. Pourquoi ? Parce que les aides-soignants, aujourd'hui, ils sont globalement sous l'eau. Ils ne peuvent plus faire leur métier qui est de soigner. Et donc nous, Emobots, on leur fournit cette information de l'état émotionnel. Ils vont pouvoir mieux comprendre l'évolution de l'émotion de leurs résidents, de leurs patients. Et derrière, on sera aussi capable d'objectiver. C'est-à-dire qu'aujourd'hui, quand on fait un test pour la dépression, c'est un test normé, ponctuel, où on demande à la personne de verbaliser les informations. Et donc ça pose plein de problèmes. Et notamment de difficultés pour les personnes qui ne peuvent pas verbaliser.